Running a business can be all-consuming, and many business owners spend most of their time working in the business and not on the business. If something happens which affects the ability of a business to function, it can be both financially devastating for the owners and the staff. Business interruption insurance is something that really should be considered. I'm here to discuss this issue further with John Farrell, a commercial insurance broker. Thanks for joining me, John. As a starting point, Johnny, what is business interruption insurance?
Pretty much business interruption insurance is something that kicks in the event that there's a claim and the business can't trade.
And what does it cover?
Business interruption insurance covers gross profit of the business. So in the event of a claim, and as we mentioned before, the business can't trade, the insurance kicks in and covers the gross profit of the business, so the business can continue to not necessarily run but pay its bills.
Can you explain in practice how it actually works?
Yeah, we can. We've got a recent claim at the moment that's ongoing with a car wash that's close by. Now that car wash had some malicious damage done to its payment machine, therefore the business couldn't operate. So the business interruption has kicked in, is paying the gross profit of that particular section of the policy and that section of the business, because the car wash can still operate, so with its manual bays, but the automatic bay can't, so the business interruption has kicked in to pay that part of the business. So the business continue to pay its bills, continue to run, albeit at a lesser capacity. So in this case, the claim is only 50% of the gross profit, but that's what business interruption is mainly there for.
What's the average indemnity period for business interruption insurance?
Most of the indemnity periods that we see on a day-to-day basis are for 12 months. So what that means is that in the event of a claim, business interruption will kick in and pay a monthly instalment for 12 months. Now that can also vary up to 18, 24 months and 36 months. That can depend on the size of the client or the size of the business, and it's very important to make sure that that's right, because in most cases, or in some cases, you can't rebuild a business in 12 months.
And how are the premiums calculated, Johnny?
It's based purely on gross profit, and that's a rateable amount. So the insurer gives us a rate, and we pretty much multiply that by the gross profit, which gives us a premium.
And what's one benefit of a business interruption policy that must be added over and above the standard terms?
The key benefit of, or one of the most important benefits of the policy that must be included is additional increased cost of workings. Now what that is, it's a part of the policy that's aside and doesn't come into calculation when the gross profit's calculated, and that continues to pay the business. What is it's an additional benefit. The additional increased cost of workings, in this case, is going to cover some advertising, a sausage sizzle, so that its clients and the public know that the business is back to full capacity. One of the things we're going to do on radio, we're going to give away some free car washes, so that the public know that it's back up and running at full capacity, and it's important that that part is involved or included in any business interruption policy, so the business can get up to full swing quickly.
Thanks for your time, John. Fascinating insight in terms of some of the issues we need to consider as small business owners. If you have any questions as a small business owner, please don't hesitate to contact us.